Hey everybody, I wanted to talk a little bit today about our current market conditions from today. I got hit up by a lot of people just asking questions on, how to trade or, why we don't, necessarily trade in one direction based off current market conditions. A lot of people today, I saw a lot of comments in chat, some people just saying, hey, I'm just going to buy puts and ride the wave. And then others asking us why maybe we didn't buy puts today to trade. So I wanted to talk to you a little bit about that. First thing we're going to do is we're going to look at SPY here. This gives you kind of an overall direction of the overall market and kind of gives you an idea of what the overall market was looking like for today. This is the 5 minute chart. So this is intraday today. As you can see here, SPY opened at about 271, dipped down to 268, and it closed yesterday at about 275. So it was at one point down almost $7 from close of yesterday. And then as you can see, it ran up considerably today, almost got to a point where it was going to close green on the day, and then pulled back towards the end of the day. So the challenge with trading this market is I heard a lot of people this morning, within the first hour or two saying, I'm just going to buy puts and ride the wave. Well, essentially, if you did that today, you're down substantially because almost everything rallied back considerably throughout the day. As you can see, say you bought puts, even here at the 270 range, you're like, all right, well, it's touched 270 a few times. I think it's going to break down through. And then you got that break and then this thing went to 274 and closed at 273. Well, on SPY, if you bought a put option near 270 on SPY and it closed in the 273, 274 range, you're down 70% plus probably on that trade. So then you think, okay, well, market's rallying. Then towards the end of the day, we're getting up here and it's getting close to the end of the day, last hour of the day. And you're like, all right, well, this market rallied back. It's super bullish. I'm going to go ahead and buy calls and ride this wave into tomorrow. And then you buy calls in this 274 range or too close to 275 range. And then you see this market pull back towards the end of the day down to 273.50s. Well, now you're down again on calls. You're down probably 30, 40, 50% on SPY calls by buying up here. And this is why today was a very challenging day to trade calls or puts. Because as you can see at the beginning of the day, if you had bought puts, you really would have gotten screwed towards the end of the day. Say you're like, screw it, I'm going to sell these puts because I'm down so much and flip to calls. Well, then you flip over to calls and you're down on those too because the market pulled back decently towards the end of the day. So as you can see, this is why trading right now is a very big challenge because buying calls or puts, you can really get screwed either way in current market conditions. So I'll show you a few other charts that have kind of, you can see another way of looking at it here. This is Visa intraday, and realistically you can essentially see the same information here for today on Visa. If you were it was hovering around 137 here. You're like, okay, I'm going to go ahead and buy some puts and ride the market wave. You get some gains here, but then you give it all back throughout the day as this thing rallies from 230 or 137s to almost 140. Well, on a stock like Visa, $2 or $3 move, you're easily down 60% plus at this point. And then towards the end of the day, you're thinking, okay, well, let me go ahead and buy some calls as this thing's rallying up. And then it pulls back. It goes from 140.04 and then it gets down to 139.05. So it pulls back $1. That's a 30% loss you're taking right there from calls. So you can see this on a lot of different charts. Here's Microsoft. Basically all these charts are going to look pretty similar. Gets a little bit down at the beginning of the day, so you're like, all right, I'm riding this wave down for puts. It goes up, you get screwed on the puts. Towards the end of the day, you're thinking, okay, momentum's looking good. I'm going to go ahead and buy some calls, and then it drops another dollar or so end of day, and you're already down 20 or 30% on those calls that you're swinging. Here's another example: Nvidia, similar chart pattern as well. This thing dives quite a bit. You're thinking, okay, I'm going to buy some puts at 216, and then this thing ends up going to 224, $8 move. You're down substantially. You're like, okay, I'm going to switch over to calls. Boom, all the way back down to 220, 219 after hours, and you're down, 30, 40, 50% again on the other side of it. So really, you can lose on both sides if you're just going directionally on calls or puts. I highly encourage you to check out our video series on spreads. That's your best bet in this current market with high volatility. Being able to open up some bull or bear credit spreads or debit spreads are going to allow you to trade in this current market without going directionally on calls or puts and still being able to capture some gains. I hope that clears some stuff up for you guys. I know a lot of you guys were kind of asking about, what trades we were going to make or why we weren't riding one wave or the other. And as you can see today, sitting on the sidelines was probably the best bet because if we bought calls or puts, more than likely we'd be sitting at a 30, 50, 75% loss either direction throughout the day today. So just something to keep in mind. I highly recommend learning about spreads and watching our video series on spreads, as I think that will help you in current market conditions trade successfully. If you have any other questions, feel free to hit us up in chat. Have a great day. Thanks.